first thing to say about Donald Trump is probably nobody knows. His policies have been very random. His willingness to see those policy ideas through is clearly untested. I mean, what you do know is that with Trump as president, you've now got the three parts of the US government in Republican hands. So I think that's generally going to be in the direction of loosening regulation. But in terms of the very specifics of Trump, unlikely to really have any real sense for some time. I think, however, the framework is likely to be one of loosening regulation for US banks. I'm quite skeptical though whether it's going to have much of an impact for banks outside of the United States, not least because clearly part of Trump's mandate seems to be about making America stronger and about putting American businesses first. And so whilst the loosening in the US may well follow, I'm unconvinced it's going to necessarily lead to anything outside of the US, and indeed arguably the relative position of non-US banks may actually deteriorate as US banks get various regulatory abatements and Europeans don't.
Well, I think it's very early days to say. What I think is that we need to press ahead with the financial reforms. We are still implementing the decisions of the G20 leaders of 2009, so we need to complete the package and move ahead. We are, of course, discussing a very difficult package now at the Basel Committee level, but I'm confident we will find an agreement there, and I think it is important to have a global standards that underpin cross-border banking. We need this now more than ever.
I think the regulatory move to increase capital standards, to improve liquidity, I think have been embraced, and I think have made the financial system much safer. I also think that the G20 recognizes having coordination amongst bank regulators around the world is essential to have a global financial market, and we need a global financial market if the global economy is going to prosper. I also think that the Trump administration has other more pressing issues for them, whether it's Obamacare and the whole healthcare system in the United States, whether it is immigration, whether it is infrastructure spending. So if he's got a couple of main issues that he needs to focus on, I don't think redoing Dodd-Frank will be one of them.
I think there will be a change. There are obviously some very senior staff of the agencies, officials that will be replaced. And they're going to look again, I suspect, at possibly combining some agencies or structural change. Whether or not that happens, I think what looks as if it's going to happen most likely is looking again at the solution to too big to fail. There's a whole raft of solutions that have been composed post-credit crunch by the US and Europe principally. One of the things that they're looking at doing is reinstating Glass-Steagall, which splits banking from investment banking. If they do that, it would permit them potentially to remove some or all of these other reforms that have taken place post-credit crunch, because too big to fail will be dealt with in a different way. So whether they do that or not, I don't know, but it does look as if they're going to look fundamentally at whether or not there's a different way of tackling too big to fail, and that could lead to ripples around the world in terms of consequential amendments and differences of approach taken elsewhere.
It felt like we were at an inflection point, or at least debating the inflection point in any case. If the voice coming out of Washington is incrementally less hawkish in terms of incremental regulation, then of course that's going to shift the likely outcome, at least on the margin. That said, the Federal Reserve Bank has a strong element of independence, and I think that's highly unlikely to be challenged in a fundamental way, at least over the short term.